I did all that talking with no audio. Oh my gosh. How long was I doing that? 24 minutes. So everything, that's what I get for rushing. You know what? I'm gonna just blow this up so you can see how embarrassed I am. I can't believe. Yes, I can. I can believe it because I was rushing. I can't believe it. I'm just running my mouth with no audio. And whoever peeked in here could at least told me, hey man, your audio ain't on. Nobody can hear you. But anyway, we about to fix it. So where is this button at? Man, that's what I get for rushing. I gave away all that game. You couldn't even hear it. Let me see. Where is it? Where is it? Where is it? It's on here twice. Here we go. The audio is fixed now. That's what I get. And normally I leave these videos up, but that was a long time of embarrassing myself. Normally I leave my mistakes up. Let me take this. Don't give me no tip. Let me take this tip off the screen. Somebody could have said something. Hey, I'll go. I know somebody peeped in here and said, fool, I can't hear you. And they just let me go. Look, everything popping up on the screen. I don't need none of this coming up right now. Ashamed as I am. Not financial advice. All right, there we go. Man, I can't believe it. I'm just running my mouth, just talking. Ain't no audio on. I got to do this all over. Man, I wish somebody had said something. That's why I need a producer. I need somebody at least be on the backup, on the watch out, to look over my shoulder, be like, hey, man, we can't hear you. Cut the mic on. It was on. But it was muted. Give me a second. Amen. So yeah, it was muted. But man, I'm used to making mistakes. It's a part of the game. It's a part of the game. Maybe it was for the good. Who knows? But I'm excited about what you couldn't hear me saying. So I might well start over from the top because you couldn't hear me. Welcome to Market Recap. Nope, that ain't even it. I'm messing up again. Give me a second. Let me enjoy my tea. Welcome to Market Hour Live. I am your host, Joseph Martin. And thank God it's Tuesday, I think. That's how busy I be, guys. Rushing, trying to figure out how I'm going to do something, how this going to work. I did get something taken care of earlier that I'm extremely excited about, that I'm going to take care of when I get done trying to salvage this live stream I ruined for a half hour with no sound. But the reels, the shorts and the reels on the Original Greatness Shorts channel and on Instagram and on Facebook. As a matter of fact, if you still tuning in, bless your heart. And here we go. Please go over here and follow this Facebook page right here. I want to start live streaming. Well, I need a certain amount of followers. I need 100 followers. Once I get my 100, I will stop asking. But asking, you shall receive. You shall ask. Ask. Let people know what you need. Please go over there to this channel, I Am Original Greatness, at Facebook, and follow this page for me. It will help me out tremendously. Okay. I needed to have that page for at least 60 days and 100 followers before they allow me to start live streaming on that channel. So if you could be so kind, go follow that page for me. It would be greatly, greatly appreciated. So what I'm excited about that I was explaining earlier when I had the calculator up and I was just yapping and you guys couldn't hear me was the importance of understanding the numbers and how they work. So one of the things that I've noticed that my students and some of my viewers, some of my friends, some of my family complain about or are worried about is that they feel like they don't have enough money to trade or invest because the companies or investments or ETFs or financial instruments that they are interested in cost too much. Man, I can't afford to buy a $700 ETF. I can't afford to buy a $250 stock. I can't afford to buy a $400 or a $500 different stock. There's just some of the I can'ts that I hear. So now what's happening with these brokerage accounts, these brokerage companies. So when I looked into it, Fidelity was one of them. Robinhood was one of them. And Charles Schwab is starting to roll it out. And what's funny about what Charles Schwab is doing, and I don't know if the other brokerages are doing the same thing, but they're not really promoting it. They're not discussing that they're rolling out this fractional share purchasing ability. So on Charles Schwab, they're marketing, it's not marketing. They have their own little way of saying it. So they call it stock slices or share slices. They've branded a term that they use on their platform, on their website for what they call it. But it's basically fractional share purchases. And from my research of what I've seen, they only limited it to the S&P 500 companies. So they would only allow the person to purchase fractional shares of an S&P 500 listed company. Those are the only companies they were allowing the fractional share purchases with. What I was interested in was knowing if they were going to start offering it for ETFs, exchange traded funds. So on our live streams that we do with the Market Recap Lives, we cover the SPY, and the SPY tracks the S&P 500 index performance and allows investors to own a percentage of the companies listed in the S&P 500 index. As a matter of fact, since I didn't embarrass myself so bad earlier, I can go ahead and share some of this stuff with you about, and let me put this up. If you have any questions, anybody tuning in and want to ask a question, feel free. I'm here. I have time. So I'll put this on the screen. Hit that like button. I definitely would appreciate it. And if you see it, I done made a mistake, like the sound ain't on like we did earlier, say, hey, man, your mic ain't on. Say something. Help me out. All right. So there is a website that I have found outside of the Charles Schwab platform that explains and shares a lot of this detailed information about the S&P 500 index. So I'm about to pull that up for you right now and show you what that website is. Here it is. All right. So here we go. Let me pull this up. I hope this works. Let me push this button and see what happens. That wasn't it. So let me see. Is this it? Cut it on. Give me a second. Don't run away. I'm going to get it. Here we go. All right. Blow this up. Now, this website has a lot of ads because it's free. So I'm going to warn you about that. But this website is called Slick Charts. Okay. So Slick Charts, if we go up here to the top, let me see if I'm zoomed in all the way. Yeah, I'm at 170. Let's go to 175. That looks good. So what we're looking at here, guys, right here where it says S&P 500. So they have these lists broken down for you already. And this is a free resource. It's called slickcharts.com. Matter of fact, let me do this. This is going to throw my stuff off, but it's okay. I'm going to go ahead and add this to help you guys out. So Slick Charts. Bam. And then I go here. All right. I'm gonna put this on the screen for you. Okay. I'm gonna drag this down so I don't throw everything off too bad. There you go. So that's the information, slick charts. So that's where we are right now. So you can see that. We're not talking about Charles Schwab. So let me fix this. Now I got to look for it because I think I slightly threw everything off. Let's do this. Go to chat and see if this works. Not financial advice. It worked. Good. Thank you for tuning in. I really appreciate you because I've been struggling for the first half hour of this live stream. But right here, the S&P 500, we can see the companies that are listed in it. Okay. By going right here, we can see the dividend yields for the company, the cumulative rates. If you don't understand what these are, I'll break down some of them. Okay. So I want to find out what companies are listed in the S&P 500 index. You can go right here, click companies. So right here, they give you a list of all the companies listed in the S&P 500 index. And then some people think, let me take me off the screen. Some people think that it's specifically 500 companies, and that is not true. So when we scroll all the way down to the bottom, and I can't cut these ads off. I wish they had a paid service so you could, but they don't. So right here, there's 503 companies listed in the S&P 500 index. Can you see that right here? 503. These are the full list of companies. Now, let's say, let me put me back on the screen. Let's go to the top. Boom, 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 boom. Go, 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 go. Go back to the top. Here we go. And now I'm going to put me back on the screen. Okay. Now, let's say it's a specific company. You want to find out if they're listed on this list. Here's the trick. Control F. You can do Control F. This is going to help you find whatever's listed on that page. So let's say you only know the ticker, right? You type it in. So I'm going to look up a Cami. It's not a Cami. I don't know why. A Cami. So AKAM is the ticker for that company. Now, when I click enter, take me off the screen because it's blocking it. It popped up. There it is. Here's the ticker. ACAM. Akamai Technologies Incorporated. That's how you can search it from the page. If you don't want to go through the whole list because it's not in alphabetical order. So another ticker, let's say Clorox. So Clorox would be CLX. There it is. See how quick that was? It's highlighted in orange. So what's another one? PG, Procter & Gamble. There it is. All right. So this is a free resource, guys. You can go right to slickcharts.com and you can find out what companies are actually listed in the S&P 500 index. Okay. Now, here's the other smooth thing about this website. Right up here, the S&P 500, they'll tell you what the year-to-date return is for the companies. So year-to-date starts January 1st, 2026. So if we go to that list, they'll tell you, wait a minute, let me read this because I usually look when the market closes. Component returns. Okay, you had to select that. So it gives you the order in rank. So the top listed company in the S&P 500 for the year-to-date returns is 483.14%. Starting from January 1st, 2026. This is a free resource, slickcharts.com. So you can see what in particular companies inside the S&P 500 index are performing the best this year so far and how well they're performing. You can see it right here on this website. And I know the ads are annoying. That's how they are able to offer this website. I wish they had a paid version where you get rid of the ads, but they don't. So I'm not being cheap. They just don't have a free version. All right. So you can see that SanDisk and Intel just this year alone are up over 200%. SanDisk is up 483. You just go down the list. Okay. You just go down the whole list. And they even show you the worst performing ones, okay? So we go down to the bottom. So this company, EPAM, ticker EPAM, EPAM Systems, lost 53.36% this year alone, okay? So now here's the other thing. The 503 companies listed in the S&P 500, in the S&P 500 index, are not weighted equally. They only represent a certain percentage of that in particular index, okay? Now here's how you find that out. Right here where it says cumulative weights. You click that, now it shows you a breakdown of the companies and how much they represent inside the S&P 500 index. What's their weight? So NVIDIA holds the largest percentage in that calculation. So they take up 7.92% of the 100% of that ETF index. So let me show you how we would look at this, okay? So we're going to put in 100 and we're going to subtract 7.92. So the other 92.8% that's left that represents the S&P 500 index would drop down to the next company. So Apple takes up 6.48%, okay? So we will subtract 6.48%. So you can see how fast this is dropping. I want you to understand this. That's why I'm breaking it down this way. Now, when we go down to the lowest weight, look how small these percentages get. So EPAM, my nose is running. Give me 1 second. Okay, so EPAM only takes up, you can't see it. Here it is, EPAM. EPAM only represents 0.01% of the S&P 500 index. So now if we subtract EPAM, subtract 0.01, you can see that barely moved. Now here's why this is important. Look how many companies only take up that much of a percent. This is why when NVIDIA performs bad, it weighs down the index because it represents so much of the S&P 500 index. Same thing with Apple. Apple takes up a lot of the weight. It's number 2. So these leaders, when they perform good or bad, it weighs down the index more because they weigh more in the calculation. All of the companies are not divided up equally in the 100%, and I'll show you what that would look like. So it would be 100% divided by 503 companies. So if you did it like that, each company would be equally weighted. The number here, this percentage you're seeing would be 0.19, 0.1988, you see? But it's not evenly weighted between the 503 companies. If it was, the weight percentage would be the same for every company. And I think right here, they're adding it together for you right here. So let me double check to see the cumulative weight. Let me see if this 7.92 plus 6.48 is this 14.39. It is. They rounded it up. So what they're doing as they come down the cumulative weight, they're showing you how much of the 100% is already taken up as you go down. So by the time you get down to Google, and Google is on here twice. Here's another educational thing that people might not know. Google is 2 of the companies in the S&P 500 index. And the reason why is because Google sells shares on the open market where one has voting rights and the other one doesn't. So some people don't know that when they purchase shares of a company, they end up having voting rights. So Google sells Class C shares that don't have voting rights, and that's going to be ticker GOOG. The longer one, GOOGL, has voting rights, and that's Class A shares. So Google is actually listed in the S&P 500 twice. So by the time you get down to, let me see, I want to find 75. By the time you get down to the 96th listed company, that's 75% of the S&P 500 index weight. So you only have 25% left, and 25%. So let's do the math on this. That 25% is represented by, because we have 503. So 503 minus, because this is 96 companies that take up 75% of the weight. So you subtract 96 from 503, 407 companies of the 503 companies listed in the S&P 500 index take up only 25% of the weight. This is crazy. Like, some people do not know this. They don't know. This is very important to know. So the majority of what the person would be invested in would be the companies with the highest weight. That's where the majority of the investment would go if someone was to purchase the ETF SPY, the SPY ETF that tracks the S&P 500 index. So the majority of the weight you would get would be in NVIDIA, Apple, Microsoft, Amazon, Google, Broadcom, Tesla, Meta, because they hold the most weight in the S&P 500 index. Okay. Thank you guys for tuning in. If you have any questions, please feel free to ask. Matter of fact, I'm gonna go ahead and put the Q&A up on the screen so you guys will know. And I'll give you a shout out. You leave a comment. I definitely would appreciate it. Normally I don't do the live streams in the morning, but I need to get my watch time hours up and make sure that I do it. So I talked about earlier when the volume wasn't working, or it was working, I wasn't working. I had it muted. I wanted to talk about purchasing fractional shares, but before we got into that, I wanted to explain why this was so powerful. When people think that a stock is too expensive for them to purchase, then they don't participate, or they think that it's impossible for them to start trading or investing. Okay. So now these brokerages, Webull, when I did the research, I found Webull, Fidelity, and Charles Schwab is starting to roll this out. It's called fractional share purchase. So what this allows people to do is just use whatever money they have available to go ahead and purchase fractional shares. They can participate. So if they can't afford to buy the $700 stock, then they can go ahead and purchase a percentage of it. But the company has to be listed on Schwab specifically. I don't know about how the other brokerages work, but on Schwab, the company has to be listed in the S&P 500 index. So this tool, the one I'm showing you, the slick charts, allows you to see what companies someone would be able to purchase in the S&P 500, because it breaks down what those companies are. So that person can use this list to go through it to look for companies they would be interested in trading or investing, because they know that they can purchase fractional shares of it from using this list. Okay. Now, on the ThinkorSwim platform, I want to show you guys how to put in a fractional share order. And yes, I'm going to use a paper trading account because the market is open and I do not want to actually submit this order in my account for real. So I'm going to use a paper trading account. So I'm giving that disclaimer now. That's not a real account. I know it's not real. I'm not about to put in a real order while the market is open because I'm not ready to purchase this stuff. But I want to show you how to do it. It works the same way. And this is actually what a beginner trader or investor needs to use or should use, is a paper trading account, so they can learn the mechanics of how to submit these orders, how to read the charts and all that other stuff without having to use real money. Because what paper trading does not prepare you for is your emotions, or are your emotions. When real money is on the line, a person react different. So you can't simulate real emotions if it ain't real money. So that's the only drawback in my personal experience and personal opinion when it comes to, hold on a second, when it comes to paper trading. Paper trading is about understanding the mechanics, position sizing, risk management, how to execute the orders, how to read and navigate. That's what it's for. It's perfect for that. But as far as like, learning how to manage your emotions, that is not how that works. That is not going to get it. Not in, give me 1 second, guys. Give me 1 second. All right. 1 more second. I'm signing in. I gotta get in here. Man, I can't believe I started this live stream with no sound. Man, I was looking crazy. I did it for a whole 24 minutes too. I wonder if that's a record for somebody looking crazy for 24 minutes. Oh gosh. All right. We signing in because that's what we named the live stream, how to execute these fractional share orders. I'm glad I had everything blocked because I forgot I had this even pulled up like this. All right. So let's do a fractional share order. Let me pull up this. Trading platform. Thank you for tuning in to Market Hour Live. This is the one I need. Okay. So how we're going to execute these fractional share orders, it's very simple. Okay. And I'm going to use the SPY because we talked about that earlier. Matter of fact, I'm going to do a little bit more education. You might be a beginner. So right here, I don't have it. Do I have this open? Yes, I do. But it doesn't seem like it's working. I wonder why it's not working. It's this tool I'm attempting to use. And for some reason, it's not working. So let me restart this and I'll just chat with you. I will just chat with you. Got this tool that allows me to quickly browse through these different things on that allows me to draw on the screen. And I have my mouse programmed to be able to do it, but now it's not working from my mouse. I'm trying to figure out what the heck is going on. I got it. I see what it is. All right. So let me go here. And I can go here. We're going to exit it and open this back up and see if we can get this going. Okay. All right. So blow this back up. Bam. Go here. Relaunch that tool. Please work this time. Because I really want to point this stuff out on the chart. I know this will be helpful to people. Here it is. Nope. It's not working. I have no idea what the heck is going on. So anyway, right over here, this is the symbol box. We're going to type in SPY. SPY. So that's the SPY. And market is open. They coming down today. So yesterday they hit a 52-week high at that 740.79, but today they pulling back. Right here. This is today's candle. We're looking at a 1-year daily chart, but we focused on the orders. I didn't got distracted looking at what's going on with the chart. But anyway, we right click on the screen. Right down here where it says buy. We click buy. Now this order window is going to pop up. We want to go to edit. Go to edit. And now this is going to pop up at the bottom of the screen. So let me take some of this stuff I got on the screen so you can actually read this order to see what I'm doing. So first we take me off the screen, take off this Q&A. We already had that disclaimer there, so we're good. So when we look at this order down here, this is where we are, and I'm gonna walk you through. This is where we are, and I'm gonna walk you through it. So the SPY, so it's telling you what type of spread it is. It's a stock, but it's actually an ETF, but it performs the same way as a stock when it comes to submitting these orders, okay? So right over here when it says type, that's where ETF is. So we're buying. I want to show you how to buy fractional shares of the SPY ETF. So the way you do that, the market needs to be open for this order to be accepted. You can put it in when the market is closed. Let me put me back on the screen because I'm talking. You can put it in when the market is closed, excuse me, but it won't actually execute until the next regular trading session because these have to be submitted as market orders. If you don't know what a market order is, I don't want to say don't worry about it, but a market order basically means you're buying that financial instrument for whatever is trading at the time the order is submitted. So since the market opens at 9:30 a.m. Eastern time, it's going to fill this order for whatever it's trading for at 9:30 when that market opens, or while the market is open, if you submit it, it's going to fill it for whatever it's trading for at the moment that order is submitted while the market is open. So since the market is open right now, when we submit this in this paper trading account, this isn't real money, it should execute it and fill it immediately. Okay, so this is how you do it. I want to show you how much this is trading for right now. Up here at the top of the screen, and I'm just going to manually use these tools since the mouse isn't working. Right here, we can see B and A, bid and ask. That's what that stands for. And it's going to be fluctuating because the market is open. But basically, it's trading between $730 and $735. I'm using a range so you can get an idea because it's moving around and fluctuating right now. So to just cover that, that's what we're looking at. So let me erase that and go back here. Man, I sure hate this ain't doing it automatically. So this is where we do it. So let's say the person only has $300. It's trading for more than $300. Keep that in mind. So we go right here. You see this icon? Well, you can't see it because I'm blocking it. Right here in the order window. These bowling pins, it looks like bowling pins. This is the number of shares. So this is what this is set to. We're not going to base it off the number of shares. We're going to base it off the amount of money we're using to purchase it. So we need to click this to change it. Now it's the percentage of a position. This is useful for a different reason. We're not using this one, so we click it again. This is going to be the amount of money you intend to spend on that financial instrument. So we said $300. The person only has $300. So we're going to change this to $300. And that is it. So now what it's going to do when we submit this order. So the symbol, here's the ticker, SPY. Here's the type, it's an ETF. The type of order is a market order. With a price. The price is going to be the market price. That's why market is here. The type of order is right here. It's a market order. So we're not going to change it to anything else. We need it's on the right thing. It's a market order. And we're submitting it today. So it's a day order. Okay. And now we confirm and send. Then it's going to do a check. So it's checking with me to confirm, is this what I really want to do? Put me back on the screen. So order description, buy $300 worth of SPY at the market to open a position. That's what to open means. The cost buying power effect, blah, 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 blah. And it tells me what account I'm using. Now, when I click send, bam, it filled. I don't know if you heard the little chime or whatever, but what that did, that allowed me to buy a fractional share of the SPY. I was able to purchase it for $300, not $732. Okay. So I'm going to show you where that is in my positions. All the other stuff you see, this is a paper trading account. It's not real. And I'm not suggesting that you purchase anything that you see in this paper, not personal, in this paper trading account. Okay. Don't try to follow those. Ignore that. We're focusing on the educational aspect of this. So we go over to monitor. And right here, the sub tab is activity and positions. So we're going to look for the instrument. Remember how I said financial instrument earlier? Financial instrument. That's why that says instrument, because it could be a stock. It could be an ETF. There's different types. It could be options. There are different types of financial instruments. But this one in particular that we just purchased, for the example, was the SPY. As a matter of fact, let me put the Q&A back up on the screen. So here's the Q&A thing, and let me take me off the screen. Here we go. So now we're going to look at it. So we're going to look in this list and find the SPY. Here it is right here. Boom. Now you notice when it says quantity, that's not a full number. If it was a full share, it would say one. It says 0.41. And the reason why is because it's a fraction of a share. That $300 gave me the ability to purchase 41% of a share. That's what we're looking at, 0.41. And you can see that that was successful. So the trade price is what I purchased it for. So this is what it was trading for at the time I purchased that fractional share. The trade price was $731.70. And that's rounded off. That's some extra stuff. And can I talk to you and be seen with that not being blocked? Sort of, kind of. I want to be on the screen. So anyway, if I need to take it off, I will. Can I just move this up? I don't think I can move it up. If I do this, it will. There we go. All right. So I moved up the drop down. So as we can see right now, I just purchased the fractional share, guys. I don't own a full share of the SPY. And already I'm up 28.29 cents. As you can see right here. So that's my profit and loss since the open. Open means since I purchased it. Remember when we put the order in, it says to open? So open means an open position. This is active. It's participating in the market, specifically in the SPY ETF. The P&L, profit and loss for today, is 31 cents. Since I opened it, it's been 32 cents. So since this was done today, these should match. So let me show you the difference. This in particular position right here, target, I didn't purchase this one today. So the profit since the open, remember this is a paper trading account, this is not real. I'm up $3,219.50 since I opened that position. But today, just today, I'm up $392.50 on that position. Okay, that's why those numbers are different. So this is the profit and loss since I opened the position. This is the profit and loss based on today. The SPY, the fractional share we just purchased today, I'm up 35% on the open because I opened it today. And then the profit and loss for today is the same because they both on the same day. I hope that made sense. Now, I showed you that that could be done with the ETF and how to do it. Now I'm about to go over and show you how to do it with, no, I'm going to go and show you that this can't be done with a company that's not listed inside the S&P 500 index. So let's do that first. So let me go here. I don't remember where I got it. That's not it. Okay. We'll figure it out. You're here. I appreciate you for hanging around. Okay, here we go. We're back on Slick Charts. So what I want to do, I want to show you that the company I'm about to look up is not listed in the S&P 500 index first, because we're using the Schwab, and I told you Schwab only allows you to buy fractional shares in companies that's listed in the S&P 500 index. And we're going to do more than an hour today with the market hour live, because I didn't have the sound on for the first 24 minutes, and we're on the road. We're actually doing a good job with this. So again, we're going to do Control F. So this is going to do the find for me. And I want to see if Lyft is listed in the S&P 500 index, LYFT. It says no, it didn't find anything. You see that? But Uber is listed, UBER. You see that? It is listed. So if I scroll down, it found it on that page. Got it? So we know that Uber is listed, and we know that Lyft is not listed inside the S&P 500 index. So what we're going to do, we're going to go back to ThinkorSwim. We're going to go to the charts, and we're going to type in LYFT. Now, what we're going to do here, we're going to check to see, look at those wicks. Those wicks is nasty on the last 2 days. I'm sorry, guys. This is my thing. I'm excited. Hold on. All right. So what we're going to do, we're going to do the order thing again. Now, when we do the order to get the fractional shares for Lyft, we're going to see if it rejects it, because when I did my research, it was saying that it was limited to only companies that was listed inside the S&P 500 index. So first, we're going to try it with Lyft, and then we're going to try it with Uber. Okay. So we can see, and the minimum, if I'm not mistaken, was $5. You could not purchase less than $5 of a fractional share of a specific financial instrument. Okay. So I broke that down. So let me take me off the screen, and let's put in this fractional share order. I think I need to take off the Q&A too, but we'll worry about that in a second. So I'll right click on the screen, and I'll scroll down to buy. And then we're going to go to edit. And then the stuff down at the bottom doesn't matter. I can leave the Q&A on the screen. So right here, we have a buy order. Now remember, right up here where I had showed you, I'm going to do a box this time. This is the current trading price, the bid and the ask. So we can see that Lyft is trading between $13.70 and $13.75. I know that says 71, but since the market is open, it's fluctuating. So I'm just giving you a range so we can pay attention to that. Okay. So now I'm going to delete that box. I don't have to delete it. Let me see if it, okay. So when we go down here, we're buying the stock, and this is the quantity of shares. We're not doing quantities because we're imagining we can't afford to buy a whole share. So we keep changing these bowling pins. I call them bowling pins. Hit that. Then we do the percentage. We're not doing a percentage. We're doing a dollar amount. So we're going to change this to $10. We're going to buy $10 worth of Lyft and see if it allows us to do this. Now, when we go, so Lyft is the symbol. The type is a stock. It's not an ETF like we looked at before. It's going to submit it as a market order. So the price is going to be whatever the market is at the time we submit it. It's a market type order. We're doing this for today. Now we click confirm and send. And now it's giving me the opportunity to double check it. I want to buy $10 worth of Lyft at market price to open a position, or to add to an open position. Yes. So I click send. And now I'm just waiting to see if it fills. Matter of fact, I know it's going to fill, because if they didn't allow us to do it, it would have got rejected. So guys, this is even better. This is even better. They are not just limited to companies listed in the S&P 500 index. We just double checked that. But they're not really promoting this. They're not promoting it. I don't know why Charles Schwab is not promoting this. Like, this is low-key secret information. They are not promoting this right now. So you can purchase fractional shares of ETFs and companies now. But if it won't let you do it, it just will reject it. It will not allow you to submit that order. And we can double check to see that this filled, okay? So first I'm going to go ahead and delete that box, which we did. So we're going to go over to monitor, and we can go right here to field orders. So these are the 2 orders that we filled today. We can look at that right here at the top. So we bought twice today. The first time we bought SPY, that's this one. The second time we purchased, we bought Lyft. This one was the ETF. This one is a stock. This was what the stock and the ETF was actually trading for at the time we purchased it. Okay. That's what it was when we actually purchased it. And this is the type of order we submitted and all of that. And this is the quantity now. And we can see that that's less than a full share. So this one is about 41%, I'm rounding up, of a share. And that was about 73% of the SPY ETF. Did I do that backwards? I did. The SPY was 41%. So we own 41% of a share of SPY, and we own 73% of a share of Lyft in the example when we did the fractional share. Now let's go do the same thing with Uber, because Uber is listed in the S&P 500 index, but I know it's going to accept the Uber one if it accepted Lyft and it wasn't even listed in the S&P 500. But let's just go ahead and do it. Uber, we put that in the symbol box. We submit the order again. Let me take me off the screen. So we're going to right click on the screen, or you can click up here. So let's do this a different way. We click here and then we click buy. And then we're going to change this to a dollar amount. So it's trading between $76 and $77. And remember, I showed you where that was, right up here. So we're going to purposely put in less money than that. So we're going to put in $50. Buy $50 worth of Uber stock. This shouldn't be a limit. This needs to be a market order. You can't do limit orders with that. It has to be a market order. We're going to put this as day. Confirm this in. Read over it. Buy $50 of Uber at market to open a position. Click send. The order's sitting there. We wait on it to fill. Bam, it filled. So guys, you can purchase fractional shares now on Charles Schwab and other brokerages from, like I said, my research that I've been doing. They're offering this on other brokerages as well. If you're using a different brokerage account, you need to check and see. You need to ask. You need to find out. But now the price of an actual ETF and stock should not be an issue anymore for people saying, I can't afford to buy Tesla. I can't afford to buy Amazon. They cost too much. The person can purchase a percentage of it. They can buy fractional shares now. Now, earlier when I was trying to explain how this is powerful, I didn't have a mic on. So that's my goofy fault. Excuse me. But I'm going to show you what I mean by focusing on the amount of money that's invested, versus the quantity of shares that someone owns. You want to look at the cost basis. So here's what I mean. If you own 100 shares of Lyft, Lyft is trading at $13. I'm rounding it off, right? So that means that the cost basis would be $1,300 to purchase 100 shares. But Uber is trading at $73. I think that's what we saw. So if it's trading at $73 to get 100 shares, it would cost you $7,300. That's a big difference from $1,300, right? But here's the thing. Focusing on the percentage, focusing on the number of shares. If someone had 100 shares of anything, if that financial instrument goes up $1, they would be up $100. That's how that math is simple. That's how that math is broken down. But when you use the cost basis and focus the percentage on it, it opens up a whole different perspective and understanding. So this is what I mean. Fractional purchases, right? So if that person only purchased $50 of Uber and Uber goes up 50%, that percentage change will be applied to the $50 investment because that's how much of Lyft that person purchased. So they're still participating in the gains or losses of the Uber investment. So let's multiply this times the 25%. So times 25%, that changed to a decimal. So they would have earned $12.50 on their $50 investment. $12.50 ain't no money. You only put $50 in. So it's not that $12.50 isn't a lot of money. It's based off the percentage of whatever was invested. So if the person had invested $20,000 and then got a 25% return, now that's $5,000. But it wasn't that the percentage gain was higher. It was that they invested more money. The cost basis and the percentage, not the amount of the return. Don't focus on the amount of the return. Try to understand how you got there. You got there because the percentage gain was based off the amount of money invested. You invested a little, and that money is going to be affected by the percentage gain or the percentage loss. And that's where the a little and lot come from on the output. If the input was small, the percentage can stay exactly the same. So we can do this again. Now, if somebody invests $100,000, something crazy, and keep the 25% the same, I shouldn't have did that as a decimal. It was already converted. Times 25%. Now the ROI is 25,000, but it was still a 25% gain off of the money invested. So now the person only put in $1, 25%. You're only gonna get a quarter. So it's based off of how much money was put in. So now that someone can purchase a fractional share, they can participate in these percentage gains and these percentage losses. The price of the financial instrument is no longer an issue anymore. If the minimum someone can purchase is $5. And can we check that? Absolutely. So let's go back to the charts. We're still on Uber, right? I said when I looked it up, it was saying that you could only, the minimum you could purchase was $5. You couldn't do less than $5. So let's go ahead and check it in this paper account to see if we can actually do it for less. So right here, let's change it to $2. Person only want to purchase $2 of Uber. So we can see what that is. It's also up here. At market confirm CN. It accepted it. So that's even wrong. I thought it was $5. So let's see how low we can go. Go back to the charts. It allowed me to get it for $2. So we do this again. Right click on the screen. Hold on. I did something crazy. I hope I didn't accidentally. Oh, that was auto zoom. Okay. On a 1 year daily chart, go back to buy, and now we're going to try to do it for $1. No, if it let me, I'm gonna try to do it for 50 cents. Let me just get crazy low with it. So 0.50 market day confirm CN. Guys, it's no excuses. It's over. You can buy 50 cents of it if you want to. We just did it. Now I know this is a paper trading account, but usually they have the paper trading account limited more than the actual full trading platform. Let me take that off the screen. I didn't want that to be on the screen right now. So if they're allowing you to do that in a paper account, best believe you can do it in a real account. Okay. So I showed you today how to purchase fractional shares. I said I was going to wait till this weekend, but I actually gave it to you guys today during the market hour live. And I am still going live tonight at 11 p.m. Eastern time to do the market recap live. And let me check to see what company I'm covering tonight. I don't have to guess. I just need to look it up. Studio, blah, 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 blah. It looks like I am covering live. I am covering Under Armour tonight. And I know off the top of my head that Under Armour is not listed in the S&P 500. And then I had read something about an article. I had read in an article somewhere. I'm looking at so much stuff. I wish I knew exactly where it was, that they slashed the prices on Steph Curry's gym shoe, which is wow, son. He ain't won a championship in a while, but they slashed the prices on his shoes, yo. Yep. Under Armour is doing that. So I don't know. But it seems like the retail industry, like Nike, is suffering. So y'all still here. I appreciate y'all for tuning in. So let me go ahead and pull this up on the chart, show you what I'm talking about. And we can look at this industry together. we can look at this together. So I'm going to go here. I still had a Q&A up just in case you guys want to ask questions or whatever. So we're not going to look at Under Armour. I want to look at Nike, Nike. Boom. Said we can't find this. That's because their ticker is NKE, not NIKE, NKE. There's Nike. Yeah, Nike is crazy. So I'm gonna change this to a 10-year weekly chart so we can see how crazy this has been. So over the last, I have no idea why it's just going back to 2021, because this is a 10-year weekly chart, and I'm gonna show you. This says 5-year. It should have been 10. Here it is. This is a 10-year weekly chart. I was wondering, I'm like, Nike been in longer than 5 years, but we fixed it. So out of the last 10, the most recent 10 years for Nike stock, they had a 10-year high of $179.10 right here. And they had a 10-year low of $42.06. And that's right now. Like that's right now at the moment. So when we zoom in, this is this week, since this is a weekly candle and today's Tuesday. So we still got 3 more days and today's close to form this weekly candle. But guys, this is 10-year lows for Nike. All right. Now, what I want to look at is I want to look to see if this sector that Nike is in is suffering as a whole. Like, is there something going on with this sector in the markets? So let's go check that down. So we're going to go to analyze. We're going to go to the analyze tab. We already have Nike pulled up, and here is the sector that they're in. They're in the consumer discretionary sector. So what we're going to do, we're going to go over here to the market watch tab, and we are going to go to the visualize tab, sub tab, visualize sub tab. So when we go to the visualize sub tab, this is the heat map for today. And we can see that this information technology sector is hurting today. And remember, these are the companies that are the heaviest weighted in the S&P 500 index. So you notice when we looked at the SPY, man, this stuff's starting to make so much sense. Now, when we look at the SPY it was coming down today. Those are the companies that are the heaviest weighted in the SPY. So that makes sense. But the other sectors that we looked at, let's go back to Market Watch, visualize. You see a lot of green over here in the consumer staples, energy. See, Amazon and Tesla. Amazon and Tesla are at the top. They're top weighted. Let's go back to show you that. Oh man. Let's go slick charts. No, we got it as a actual app. That's why I can't find it. Here it is. So we got it open twice. So we go back to weight. So we just saw Tesla. What did we just see? Amazon and Tesla. Amazon, Tesla, Nvidia, Intel, AMD, and SanDisk. You see all of those are red. Now when we go to slick charts and we look at the heaviest weighted, Nvidia, Apple, Microsoft, Amazon, we didn't look for Google, Broadcom, Tesla, Meta. They're the heaviest weighted. So when they go down, they push the whole S&P 500 index down with it because they're the heaviest weighted, which we talked about earlier. But we supposed to be looking at Nike. So we hit this drop down on this watch list, and we're going to look at the consumer discretionary sector. So that's going to be right here. So when we look at this, let's go back to analyze. This has the SPY up now, NKE. Consumer discretionary, just to confirm, and we go back to market watch, visualize, and we're looking for Nike. I'm looking. It's down here in the corner. Here it is right here. It's down here. So that looks like textiles. So it looks like McDonald's is doing okay, CMG, Chipotle, Starbucks, Burger King. But Amazon and Tesla, you see they make up a large market share, okay? That's why their space on here is so big. You see the market cap? And this is in millions, okay? So since this is in millions, this is the millions, this is the billions, this is the trillions. So Amazon is a $2 trillion company. Tesla is a $1.6 trillion company. They take up a large market share of the consumer discretionary sector. The fast food chains look like they're doing pretty good. McDonald's had did a big dip when I had looked at their charts, and I'll pull them up. I'm all over the place, but hey, let's get it. MCD, look, now they're forming a doji down here. And I had already drew these levels. Look where it got caught at, right there at that level. That support I had drew on the chart, $276.53. That's exactly where it's dancing at right now. And I did these technicals a while ago because I was looking at how McDonald's was performing because I looked at this area right here. So let me show you that. I was looking at this area right here. McDonald's was trading in this tight range for a while. From 2024, so this mid 2024 to 2025. So I was seeing this as like consolidation. So then after a consolidation period, you're going to have one of two things happening. Either the stock is going to go up or it's going to go down. And as we saw, it went up, right? So after it went up, it had hit this new high. So let me go here and do this. Let me use the other mouse. Each mouse worked different for a different thing. So here is their 52-week high. And we're looking at a 1 year daily chart. And that high happened on March 2nd. And since then, baby, it's been coming down. So here's the channel for that. It's been trending down, baby. So it was consolidating. This was accumulation, in my technical analysis opinion, because it broke to the upside. It hit this 52-week high of $341.75, and it's been downtrending ever since. And now it's down to $271.98. Then we use this tool right here, and we can get the percentage loss by clicking it, snapping it to the top and to the bottom, and when we mouse over it, let me adjust this tool because I haven't used this paper trading account in a minute. So these are set differently. Edit properties. I want to change this to gray. No, white. We use white for this. And also I can take, no, this is behind that. Don't worry about that. And then we want the label position in the middle. That fixed it. Okay. So that's a 20.42% loss over a matter of 70 days from that 52-week high to this 52-week low. So McDonald's then hit a 52-week high and a 52-week low in a matter of 70 days. So less than 3 months, basically. Let's look at the Nike. We got this taken care of. We're covering a lot of ground real quick. So let's delete all of that. Let's go back to Nike. We were looking at the market watch visualize. Nike is over in the textile. So let's talk about how we break this down in the heat map. So we click the down arrow on consumer discretionary, and we're looking for textiles, apparel, and luxury goods. This is how I found it. The label is down here in the corner, textile. So we go there, and now it's going to blow that zone up. And we can see that whole section is in trouble, at least today. This is why I really like going to look at the sectors, the industry, and the sub-industry, because people panic when they say, oh, something's wrong with my actual investment in this company. What I learned was when you look at the whole sector and industry that the company I invested in or trading in, to see if they're all suffering, that means that it's something going on specifically in that industry. So that's not as bad as if we were to come and look here and all of these was green except Nike. That could possibly indicate that it's something actually wrong with Nike itself, because the other companies in that same industry, that same sector, are performing well. And this the only one that's suffering. To me, that's more of a red flag than seeing that the whole industry is having a problem. I hope that makes sense. So that's why I like using the heat map and going down and looking at the sectors, the industry, and the sub-industry. So we broke it down to look at the sector. The sector was the consumer discretionary sector. Then we found out the industry. It's the textile, apparel, and luxury goods industry. And then if we click it again, it'll take us down to the sub-industry. Okay, and let me take me off the screen so you can see that. You can take me off the screen. The sub industry, you have two options for that. I clicked on the wrong thing. You got apparel, accessories, and luxury goods sub industry and the footwear sub industry. So if we click footwear sub industry, that's going to be Deckers Outdoor Corp and Nike. And you can see they're both doing bad. Now, if I'm not mistaken, I think that Deckers purchased Foot Locker. Oh, wait a minute. I want to make sure I'm fact checking this. I don't want to just tell you anything. So give me a second. I believe Dick's Sporting Goods purchased Foot Locker. Let me put me back on the screen. So as I pop this up on the screen, I'm not bringing up something I don't want you to see. So let me figure this out. I'm looking it up, guys. Thank you so much for sticking with me. I really appreciate it. I'm looking this up right now. Is the ticker deck? Dick's Sporting Goods, and did Dick's purchase Foot Locker? We'll get that answer in 1 second, guys. I'm gonna pull that up on the screen so you can see it. I just wanted to make sure I organized it before I did that. So here we go. Bam. Yep, and then put me back on the screen too, and we'll read this together. No, the ticker DEC is for Deckers Outdoor Corporation, the company that makes UGG and Hoka. Okay. Also, no, Dick's Sporting Goods did not purchase Foot Locker. Foot Locker is an independent publicly traded company. Would you like more content? Somebody purchased Foot Locker. I know I've seen it. Hey, all this stuff is a blur right now. I don't want to take up our time digging through this. I was wrong based off what it's saying. But Dick's Sporting Goods ticker is DKS. So we looked at that in the heat map to break it all the way down to just footwear. I do know that Skechers actually got purchased by another company. Now, let me at least get that one right to try to redeem myself. Didn't Skechers. Now I might spell them wrong. Get purchased by a private company. Because I was watching the shoe industry. I was watching how Nike was performing, how Skechers were performing. And at one point, they were doing real good compared to what Nike was doing. But I believe they got bought out. They got purchased by a private company because I had looked into it. So let's see if I at least get this one right and blow this up. Yes, Skechers was acquired by a private equity firm, 3G Capital, in a deal valued at $9.4 billion. So yeah. So I know I seen something with Foot Locker, guys, something with Dick's and Foot Locker, but it's saying that I was wrong when it came to that. So I'm gonna have to do some more research on that. But anyway, thank you guys for tuning in. Let me go back to this main screen. I did the orders that I wanted to show you guys. Why does it keep asking for this? Take that off the screen. Thank you guys for tuning in. I don't even have my clothes ready. Let me go find the clothes to wrap this up. Make sure you tune in. Yeah, just make sure you tune in tonight. I can change that today. Okay, let's do the wrap up. You already know. I hope that you learned something, and I hope that you earned something. Thank you guys for joining me during this market hour live tutorial. I hope you learned a lot. You subscribe. Any questions and stuff you want to ask, I'm going to be doing these live streams on the weekend as well. It's going to be more of like a Q&A style and reviewing and preparing for the week and reviewing what we did that week. And I've done 2 interviews with up-and-coming content creator Tiara Owens, sharing how I got started investing in the stock market, my profits and losses, and a link to that playlist of interviews are down in the description. And make sure you tune in tonight at 11 p.m. Eastern time when we cover Under Armour's earnings. Take care and God bless.